What's up, guys? Welcome to the show. Thank you so much for joining me today. As you can see, today we had no countdown. I want to make it a little easier for those of you who are checking out the live stream after it's been published and get right into the content. Another quick tip for you before we get started here. The YouTube timeline at the bottom of this video, once it's published, has chapter markers. So if you're looking for specific content in an episode, today's episode about Microsoft Excel, you can scrub through that timeline to go right to the content that you're looking for. Just a quick tip for you when you're looking at our back catalog or future episodes, when you miss them live, you can see all of this content right in the timeline of the YouTube video. So thank you so much for joining us today for yet another episode of Be the Bank, the very best place to learn about the distressed secondary mortgage market on YouTube or frankly anywhere on the internet. Today I want to thank the 13 investors who signed up for the non-disclosure agreement in our most recent 7-day period. So a shout out here to Robert, James, Richard, Mike, Jack, and Jill, Tess, Sandra, Charles, Lola, Stephen, another Jill, and Kieran. Thank you guys so much for signing the non-disclosure agreement and becoming a vetted FIXnotes buyer. The second Jill did not sign your NDA yet, so please reach out to me if you had any trouble receiving that document via right signature. All right, so I'm really excited for today's episode because we're going to be doing a lot of screen sharing and actually operating in Excel. I'm going to try to slow down a little bit and make sure you guys get the gist of the pivot tables and the VLOOKUP formulas that we're going to be talking about today. But without further ado, let's get into the show. All right, today's episode number 19. It's the 21st of October, and we're going to get started with this show. Of course, the overview of the industry, then we talk about the tech, which is the focus of today's episode, Microsoft Excel, and some specific formulas that are useful for note investors. Then we're talking about some asset acquisition opportunities, how to become a vetted FIXnotes buyer, and then of course 2 case studies, and then some giveaways. I also want to talk about a brand new offering that FIXnotes has just launched called the Mastermind Group, but we'll talk about that a little bit later in the episode. Really exciting this week. We had 4 paid members join the FIXnotes Mastermind, so I'd encourage you guys to at least consider that. I think it's a great way to level up your note investing game, learn a whole bunch, and access some great tools and other content that'll help you in the business. So without getting too far in the weeds here, I do want to mention FIXnotes.com/learn, the 100% free online course, How to Invest in Mortgage Notes. That is available to you on the FIXnotes website at absolutely no cost. You can get through the first couple modules and then you'll be asked to put in your email address. But once you do that, you've got the full access to everything available on FIXnotes.com/learn. So definitely check that out. All right. The overview here, just to give you a quick high level, getting started, the market, due diligence, closing the deal, asset management, a whole bunch of different categories with different modules within them for everything you need to know to get into this business or brush up your skills if you're already a note investor in the game. So let's start with the industry overview where we discuss pricing and news and other happenings that are going on in the note business. And of course, you can get all of the updates at FIXnotes.com/news. That's where we host our industry news aggregator, which is a curated list of high quality, timely information from around the internet. This screen share is from September, but we've got a whole bunch of articles already published in October. It's almost the end of October already. We do about 100 articles or so per month on FIXnotes.com/news. So definitely bookmark that and check it out when you have some time to see what's going on in real estate and mortgage notes in general. All right, so I want to talk about one event this week. These past 2 weeks have been pretty action-packed. I was a speaker, a keynote speaker back in, not this past weekend, but the weekend before at the Distressed Mortgage Expo. And then this past weekend, I was a panelist at the Diversified Mortgage Expo. So I hope you guys were able to tune in and check that out if you had the time. But if not, you can always get the content from me every single Wednesday on the Be the Bank show. You're here. But on November 6th and 7th is the Note Expo. So this is an event that's put on by Eddie Speed's company. It's kind of expensive. It's about $299, I think, is the early bird, up to $699 once they stop the promotion. And it is, I will be honest, it is a bit of an upsell event to move on to the other offerings that the Eddie Speed's company provides. But there will be a lot of great content there, great networking and speakers, albeit virtually these days. But I think that if you are available and want to take the next step, the Note Expo might be a good event for you. So at least consider that at noteexpo.com. All right, let's get right into the actual content. Well, actually, let's do this first, because there is a bird today. This is the nuthatch. Let me see if I can scare him over to your side. No. We'll check the other feeders while we're at it here. As you guys know, the FIXnotes show is not only a mortgage notes program, but also a little bit of a bird watching show and some fish. We've got the koi out back, which we're gonna feed at the end of the episode, so stay tuned for that, guys. All right, so the FIXnotes waterfall evaluation process is a staple of this course because it's a launch pad to drill into different aspects of the note business. So you may have seen this slide before. It starts at secured versus unsecured, the single biggest driver of pricing in the distressed mortgage note due diligence process. If it's unsecured, it's worth next to nothing, whereas if it's secured, you can move on to the rest of this waterfall, starting with whether it's a first position lien or a second position lien, and then going down the line to determine the value of the collateral, the equity that supports the lien in question, whether or not there's been bankruptcy or any legal proceedings filed. The occupancy, if it's an owner-occupied property, it's worth a lot more than if it is tenant-occupied or even worse, a vacant home securing the property, the note that you're purchasing. And then, of course, once you get down to the bottom here, title reports, super important in first liens, and tax balances. For a senior lien investor, the tax status is really going to be their barometer as to whether or not the borrower wants the property or not. Just like a junior lien investor looks for current senior lien status to telegraph to them that that borrower wants to stay in the home and continue paying their debts, the senior lien investor looks to the taxes to see if the property taxes have been paid by the borrower, thus signaling that that borrower is interested in retaining the home. You can learn a lot just by reviewing this information in the beginning of your due diligence process to determine what the exit strategy is going to be on the back end. When you see an owner-occupied home where the borrower is paying their property taxes, you're more than likely going to be working with the borrower to come up with a resolution. Whereas if it's vacant with unpaid property taxes, it's probably going to be a deed in lieu of foreclosure, or perhaps a foreclosure if you're not able to work with the borrower to take the deed to the home. But at the end of the day, you're going to be crafting a resolution that fits the borrower's situation, and that can be determined in the beginning of the process if you follow the due diligence waterfall. On the second lien side, we look at the first lien status. As I mentioned, the most important, probably between equity and senior lien status, the two most important factors of junior lien pricing. And then equity, of course, is how we determine how much property value is left over after paying all of the other liens on that specific house. The second lien is left after the taxes, the homeowners association, and the first lien debts have been paid. So this slide, like I said, we normally drill down and talk about specific aspects, but since today's episode we're talking about Excel, we're going to save our time for that portion of the episode. However, I would be happy to answer any questions that you have about due diligence in first position or second position liens. And if it's after the fact, if you want to leave a comment below once this video has already been published with any specific questions or maybe points of clarification, I can address them in an upcoming episode with that deep dive, drilling into some of the different attributes that you need to understand when evaluating mortgage notes. All right, so let's talk about pricing because it is an important consideration. If you are reviewing mortgage notes to purchase, you want to make sure you're in the ballpark and you're communicating pricing to a seller that is not too high, not too low, but makes sense with the current market. So I've priced both performing and non-performing loans on this chart, and I've separated it this way because there's very big differences between how you price performing cash flowing debt and non-performing in default paper. So on the performing side, we price based on yield. We price based on the cash flow. Just like you buy a rental property based on the amount of rents you're receiving every month and not the appreciation and speculation about the future value of the home, in performing loans investments, you're buying based on that monthly cash flow. Guys, we got something really exciting happening. There's a squirrel about to jump onto our feeder here. Okay, hopefully he's gonna fail, because in the last couple of nights, we've had raccoons who actually jump on the feeder and rip it off. So we'll hopefully save it for the birds today. All right, so buying based on cash flow is a very, very important factor in the note business, because when you buy based on cash flow, you are investing in a future stream of income. Just like you don't buy rental properties for speculation, you don't buy notes that are performing if you don't have an appropriate cash-on-cash return. So the senior lien side, we're in the high single digits up to about 12.5%, sometimes as high as 15% yields for cash flowing first position loans. Now, I haven't told this story yet before, but the best deal that we've closed with my major client, US Mortgage Resolution, in the reperforming loan space, so this was a loan that went into default and then has now become performing again, was a first position lien that was purchased at a 15% cash on cash yield. So we were excited about that because a 15% yield in first liens is above market. It's a pretty good deal. But that deal has given us probably the most headaches of any performing loan we've ever purchased. The pricing was attractive because the borrower was especially contentious, and we've actually been in this cycle of receiving payments until a certain point when the borrower defaults. Then we send letters and reinstatement requests. The borrower reinstates, and then they go back off the wagon again and stop paying. Right now that account is in foreclosure, and unfortunately that cash on cash yield that we expected of 15% is now down to nothing, since we're not receiving any cash flow on that specific loan. So make sure that when you're doing your due diligence, if you do see yields that are maybe outside of these ranges, you understand why those yields might be higher than expected due to other factors. On junior liens, we see stronger yields. Junior liens, by definition, are secondary to the first position lien, which translates to a little bit more risk, which I believe is entirely worthwhile and mitigated with proper due diligence. And you can check back for previous episode on first liens versus second liens. But when you buy cash flowing junior liens, you're seeing yields of 12 to 22%, sometimes higher, sometimes a little bit lower, depending on a variety of factors. Some of those major factors are ACH agreements. So to make sure that the cash flow is automated every single month out of the borrower's account, it's not contingent on the borrower remembering to sign and mail a check, but actually just comes out of their account on a monthly basis. Also, the amount of equity in the deal. A junior lien behind a tiny senior could be priced more like a senior lien because of the substantial amount of equity and the risk that is mitigated by the fact that the senior is about to be paid off. Then the junior would become a first position lien. So those are some high-level factors on reperforming loans or performing cash flowing debt. If we scroll over to the other side, the non-performing loans are priced based on fair market value for senior liens or unpaid principal balance for junior liens. In first position liens, we've mentioned this many times before, you often resolve through the property. There's two paths you can take when you buy a note, either resolving with the borrower or resolving through the collateral. If the borrower is not interested in communicating, or perhaps they're deceased, then the property is the only way to go. Being able to support your investment through the foreclosure process or a deed in lieu of foreclosure process if the borrower is interested and is cooperative will allow you to price seniors based on the fair market value because that's the underlying collateral that is supporting your debt. On the other hand, junior liens often resolve through the borrower, and that's why we price juniors based on unpaid principal balance. And sometimes even an underwater junior lien can be priced fairly attractively because of those other factors. A current senior, an occupied property, that can mean a percentage of the UPB that's actually higher than the percentage of the equity that's available in the deal. So we do show a couple changes in the marketplace. 99 basis points is about 1%, 112 basis points is just north of 1%. These are the pricing decreases that I've seen in the non-performing note business in the last quarter. So pricing was going up in Q3, Q4, I've seen pricing kind of stabilizing a little bit. So these are some high-level ranges of the pricing for senior and junior liens. And a major caveat here, when you price senior position loans, these percentages of the fair market value can never exceed the unpaid principal balance, because you are not buying the real estate, you are buying the debt secured by the real estate. So if the borrower does decide to reinstate the loan and start making payments, or to pay off your loan, then you need to make sure you're paying less. You're paying a discount to the unpaid principal balance in addition to these percentages on the fair market value. So once again, a high-level overview of pricing. Happy to discuss this in more detail if you want to leave a comment below this video, or in live stream. If you guys want to leave a live chat, I'd be happy to discuss it. But I think we're going to move on for now and talk about, are we on the tech tips already? Yes, this is the main portion of the show because we're talking about Excel. And of course, we want to overview all of these other services that we use that really make our business automated and efficient. If you have a capable computer, you've got a good phone, or maybe even a landline if you have a computer that works, and you have network to the internet, then you can run this business using a variety of web services in a way that's super efficient, and at the end of the day, it saves a lot of money, as opposed to the business of the past where they had a lot of employees and a lot of overhead and buildings. I mean, nowadays commercial real estate is not looking like a good investment because we can all do all of this from our laptops wherever we are. So a few software and web services that we really couldn't do this business without: Podio, Citrix Podio Workflow Automation. This is the add-on, also called Globoflow, which allows Podio to connect with other web services and automate our due diligence, automate our sales process and our resolution steps to conclude deals. All of that is done through Globoflow and connects with all these other services. For example, Pacer, public access to court electronic records. This is how we review bankruptcy data. Right Signature is how we execute purchase sale agreements. Gmail, of course, couldn't live without it. I do probably most of my business just in Gmail. Definitely an area I could improve to put more email automation into Podio, but for now, Gmail is very important to my business. Zapier is how we connect in a code-free way our web services together. Even without very much technical experience, you can use Zapier to connect a Google Sheet to Right Signature, or to connect these different services to produce automated PDFs. Like, there's a lot you can do without any tech experience as far as coding and JavaScript to use Zapier to connect these services together. CoreLogic, we've ran through a whole entire episode about CoreLogic Credco, a very important service in the note business for bulk acquisitions to review credit and other data behind the loan. DataTree, a great service from First American that we check property ownership records and other publicly recorded documents. ProTitle USA, quick tip here, protitleiusa.com/order. You can check the, it's not always accurate, but you can check the estimated property owner of any piece of collateral by going to ProTitle USA and starting an order, and then of course using the order service to order an O&E report if necessary. But you can get that quick hit, that initial estimation of who owns the property for free on ProTitle USA. Google Sheets and Excel, well, there we're going to really drill into Excel, but Google Sheets is a great free alternative, web-based, so you can use it to collaborate with your employees and your team. Also an excellent spreadsheet tool. And then of course TransUnion and TLOXP. TransUnion is a credit bureau where we order soft inquiries, soft credit pools, and TLO is a skip tracing service that we can use to get more information about the borrowers that we are pursuing for resolutions. So a lot of things here. We've really drilled into every single one of these in the previous 18 episodes of the show, but we can definitely always talk about more here. So please leave a comment if any of these specific things are of interest to you. All right, so let's zoom in to Excel and specifically pivot tables and VLOOKUP. So I'm going to give you a quick overview of what each of these things are, and then we're going to switch over to Excel and we're going to do a screen share, and I'm going to complete a couple of different tasks for you, hopefully do it slow enough that you guys can see exactly what's going on so that you can use these skills in your process, in your own note business. So pivot tables, what are they? Well, they really just slice and dice your data. A pivot table is a way to summarize a spreadsheet of information into specific subsets that allow you to aggregate that information and see it at a glance. So the most important thing with pivot tables is to make sure that your fields are consistent. And we'll see that when we get onto the spreadsheet exactly what that means. But if you are inconsistent in your data, then your pivot table is going to be very sloppy and potentially just unusable. So in the beginning of the process, you want to make sure that you're being consistent. But if you get to the point where you want to use a pivot table, sanitize your data, look through your sheet to make sure that it is consistent, so then when you run these pivot tables, they make sense. We'll get into that very soon. Next is to find and append your data. Oh, sorry. Next is the Excel VLOOKUP. And what does that mean? So VLOOKUP is an excellent tool. It's probably the most used Excel feature. And what it means is vertical lookup. It allows you to find a specific field that matches another spreadsheet and then append the subject spreadsheet with additional data from your supplemental sheet. And this is sounding way more confusing than it is. So let's actually just get over to it and I'll show you exactly what we're talking about here. All right, so here is an Excel sheet. This is what I'm calling the master inventory example. So I'm gonna remove myself here so that you can see just the sheet. Let me know if I need to zoom in any farther. If you guys can read this, that would be great. Leave it in the chat if it looks good to you. And we'll get right into it here. All right, so this is what I'm kind of calling an abbreviated master inventory. It's not every single field that I'd want to have if this was the only source, the main source of data for my mortgage note portfolio. We've sanitized it so that it's protected from confidential information, but it does have enough information to start to show you the first thing, which is pivot tables. So right now we can see there's a couple different fields we might want to slice and dice. Priority is first or second liens. Senior status, if we're in second position, what's the status of the first? Let's just talk about these two for now. Actually, even this one, payment status, non-performing, seasoning, or there might even be some re-performing loans in here. So let's start here, actually. What we want to do is find out the balance of my different statuses of payment. We're going to look at unpaid principal balance versus payment status. So what I'm going to do to give us the most amount of possibilities to slice and dice here, I'm going to select everything. And you can do that up here in the upper left-hand corner. That will select all of your fields. Now I'm going to go to Data and Summarize with Pivot Table. And what this is going to give me is a prompt to either put the pivot table right on my existing workbook or add it to a new worksheet, which we're going to want to do to keep things clean. Up here you can see the table or range. We've already selected that before, but if you wanted to change it, you could do it here. So let's make the pivot table in a new worksheet. So that's going to pop up right off the bat, and we'll zoom in again. All right, hopefully that's big enough. We'll even go a little bigger than before. Over here we have the fields that we highlighted. So this is the row 1 of all of the different content that is included in that master inventory spreadsheet, which is the second tab. So we have two tabs. One is the pivot table, one is the inventory. What we wanted to do first was check the payment status. So let's drag that over into rows. So now this is going to show us that there's three different, well, four really if there's blanks, but three different statuses that are included in this column. Payment status could equal non-performing, re-performing, or seasoning. So now what we want to do is see how much unpaid principal balance lives in each of these subsets of the portfolio. So in your fields, scroll down and here's current UPB. So we're going to drag that onto this side into values. So now what we see, $sign that, we can see that the majority of the portfolio is non-performing. 3.7 million is non-performing, 285,000 is re-performing, and then another 283,000 is seasoning. So that means that we've got much more non-performing. And we could even do a little calculation here, see how much non-performing is there. Well, there's 86.7% of this portfolio is non-performing loans. Now, I mentioned this in my previous episode about Excel and pivot tables specifically, but typically when you use this, dragging down, you can get the formula to apply to multiple fields. But what you'll find in pivot tables in this version of Excel, on Mac at least, is that up here, the formula field does not change. And the dollar signs, we already tried this, deleting the dollar signs and re-dragging it down does not work either. So this is a little bit of a issue, I think, with using pivot tables in Excel. The workaround here, so that we could see all the percentages, is instead of go equals and click it, do equals and then just type in that cell, B4. Divided by this one. Oh, you don't click it because then it puts it at, actually that'll work this time though, because the dollar signs, it'll make sure that we're only dividing by the total. So let's drag that down. And there we go, 6.6% in each reperforming and seasoning, and in the grand total we see it lines up. That is cell B8 divided by this one. So that's a very rudimentary way to review unpaid principal balance across a portfolio with these row labels. Now let's say we wanted to break it down a little farther. Instead of just payment status, let's also add in priority. So we'll put priority here in rows. Now what we can see is it breaks it down further. We see that non-performing is broken into first, second, and unsecured. Reperforming, we don't have any unsecured. Seasoning, there's no unsecured either. That makes sense. Unsecured loans would be unlikely to start modification agreements. But in this case, it breaks it down to a point where now we can see, and let's go B4 divided by this. We can see the percentages broken down into each. The reason why, well, I could have left this and redrug it down as we added the additional fields, but what happens when you try to add additional columns when you've added something in the row that's immediately subsequent to your pivot table, you'll have an issue. So if we put in, let's see, we wanted to check the fair market value as well. It's going to give us a warning that it's going to overwrite this data. So we can do that here. So now we've got two separate data points and broken down in two different tiers, both the payment status and the lien position. And we know the unpaid principal balance and the fair market value. We could add any field that calculates into the values here. But we could also add fields that don't calculate, like asset ID, for example. Asset ID, we don't want to sum it, but we do want to count. So now we can see not only what's the total balance of each of these subsets, but how many loans live in each of these balances. Let's see what else we want. Let's try breaking it down even further. So if we do, well, let me show you this first. If you reverse these, it does exactly what you'd think. It puts the hierarchy in a different order. Now we're talking first versus seconds on top, and then the payment status on bottom. So that's interesting to use because depending on what you're analyzing, you typically want to have your highest tier, the highest hierarchy, be less options. And then as they break down further, you can see more of these subsets. Please leave a comment if you're following along or if you have any questions at all about what exactly we're doing here. Let's do it this way. Let's get rid of payment status and add in senior lien status. And then what we're going to do is just remove the first liens. So this little caret can give you an option to filter. So we're just going to look at seconds because first liens, the senior status is not relevant. So now we can see the senior status across the second lien portfolio. What I also want to do here is add the senior payoff. All right, and let's change the order of these. So I'm going to see fair market value first. I did that wrong. Let's do fair market value at top, and then we'll go senior balance, and then we'll go unpaid principal balance. All right, so what I want to do here is see how much equity is available within each of these subsets. So I'm going to add another column called equity above first. Oops. And we'll go equals, so we're taking the fair market value, B4, divided by the senior payoff, C4, and then drag that down. Oh, and we did one mistake here. Oh, no, we didn't. As you can see, this goes down the line. All right, so if we add a percentage here, and actually this is not looking at CLTV or LTV, the percentage that you'd be looking at to see basically the percentage of equity above. This is actually what I would call equity coverage. Let's change the name of that. So this means that this whole batch of second liens is 200% equity coverage. The fair market value, wait, did I do this right? No, I didn't do this right. Fair market value minus the senior, oh, and we did that wrong, minus C4, and we'll use parentheses here, PEMDAS. Let's add that second parenthesis, and then we'll divide that by the unpaid principal balance. All right, this, I did it wrong again, by D4. All right, now this is equity coverage. My mistake, guys. So this is taking the equity above the senior lien, so it's the fair market value minus the senior divided by the UPB. So this is 300% equity coverage. We look at this as a number. It's 3x coverage. It means that your principal balance is secured by 3 times more equity, 3 times more value than what you're owed. And you can see across the board here, semi-current's the lowest, and you can see the details here. We have less equity than the balance that's owed. But all these other categories are more than 1. If it's more than 1, there's more than 100% coverage above the senior, protecting the junior. So this isn't really the point of this specific call. I mean, I don't need to drill into specifically what fields we're looking at. I just kind of want to open your eyes up to the possibilities of pivot tables and what they can do for you. So let's scrap this. There's a whole bunch of other things we could do here, and you could kind of let your imagination guide you here. You could be looking at, if we scroll through, we can see maturity dates. You could see summarized based on year, what your maturity dates are when they're coming due. You could use interest rate to give you the percentages across the board. You could use an average to show you, and I'll show actually how to do that. Now over here we did a count. An account is different than a sum. But if you wanted to change any of these, you can click this and change what you're looking at. So I selected fair market value. So we could look at the average fair market value instead of the total. And now this formula isn't going to make any sense anymore. But now we can see that the categories here, we've got the highest value properties in the late 30-day category. And there's only 2 properties there, but they are almost $1 million homes. You could do the same thing with senior payoff. We could look at just the average of all of these fields instead of the sum. And now these fields actually do make sense based on averages. And that's going to give us a high-level picture of each of these subsets in the second lien portfolio. So I'm not going to continue to drill into pivot tables here, but we will be coming back to pivot tables very soon to combine VLOOKUP and pivot tables together to show you guys something really cool. But now what I'm going to do is shift over here to the VLOOKUP, because VLOOKUP is such a cool function. I really think you guys need to understand this. When we deal in the note business, we're using large spreadsheets of data, and keeping them organized is so very important. So when you're using VLOOKUP, and I'm going to pull myself off here again so you can see, and we're going to grab another file here. So let's use this property file, or property value, and we'll zoom in on this too. All right, so this is pretty simple. We're looking at a loan number, a property value, a valuation date, and a valuation type. And this list, perhaps you sent it to your assistant and they were using Zillow to run comps and check the different AVM values. So they got a spreadsheet maybe with just the loan numbers and the addresses, and they went through each address and they plugged in this data. So now what you need to do is bring this data back over to your list. And, oops, my mistake. There we go. Sorry about that. All right, so what we want to do is see what the property value is by the loan number. And we want to make sure that these property values match the loan numbers and come through. And you'll see right here it's bank loan number. It's not our own asset ID. We need to match based on this asset ID. So let's go right next to current fair market value, and we'll call this old fair market value. Let's call this current fair market value. So we want to bring over the data from this sheet into this sheet by matching the bank loan number. So here's how you do it. Equals VLOOKUP. Then you'll give a little cheat sheet here. Lookup value, table array, column index number, range lookup. So the lookup value, as we were looking at the other sheet, is the bank loan number, because that's the pivot. That's the, and I'm using the word pivot like pivot table, but it's kind of similar in this sense. The pivot is the similar field between each of these documents. So let's take the bank loan number, and now we're going to go over to the spreadsheet that we like, because the next thing is table array. This is the spreadsheet we're trying to grab data from. And we're going to grab the entire array. So we'll grab all of it so I can show you something else, but really we're looking for this second row, or this is a column, the second column. So you're back over here, column index number. Well, it's the second one, so 2. Column B is 2. It's not always 2. If we started on B and wanted to get to C, for example, if bank loan number was in column B and we wanted to get the next thing, it would still be 2. So this, I don't want to confuse it here, but you'll see when we get to a second example. And then finally, there's one last field, range lookup. So this field is how you determine whether or not the VLOOKUP is looking for an exact match or not. And we use 0 because we only want to identify exact matches. If we go equals here, and there it is. We've got the updated fair market value. So this is taking the bank loan number, referencing it, finding the bank loan number over here, and then grabbing the value. So this is kind of redundant because this order is, I think, the exact same order as this. But what's cool about this is this could be scrambled in any way. So let's look at property value descending. Any way you want, you're still going to grab the exact bank loan number match. Now, here's another quick tip on Excel. How do you get this formula to go all the way down? If you click this, double click it, it'll just magically populate the same formula in each of these fields. Another way you can do that is if you go all the way to the bottom. I'm going to hold Command and press the down arrow to get all the way to the bottom. Well, it's not all the way. There we go, all the way to the bottom. Now hold Shift and Command again to go all the way up to the top, and then I do Control D. So that was a little hotkey combination that I think you can kind of internalize the muscle memory, but I'll do it once again. If I'm holding Command, you can practice this, it'll go all the way down to the next blank row. If you didn't hold Command, it would look like this. If you hold Command, it'll jump to the next blank. So we go all the way to the bottom. I'll normally get there by going to a field that has all of the data in it, and then we'll go all the way down over to the column we're looking at. The Shift key, what that does is highlights the fields that you're running over with the little selection box. And since the Command key jumps all the way to the top, by going with, back to the bottom, Command and Shift, it goes all the way to the top and selects everything. And then finally, Control D is the equivalent of double clicking this little square in the corner. That just populates the same formula all the way down. So that's a few little navigation tips. All right, so we've got the fair market value, and this is brand new from the other sheet. Just a quick housekeeping thing for you to understand here. If you're using your master inventory to track all of your loan data, and you're using formulas like VLOOKUP to bring in other data, this formula here that you see takes up more memory, more space in your file than if this just said 199,000. It also references another sheet. So if this sheet was deleted or moved or disappeared, it would mess up your data that's been extracted from that file. So as a practice, what I like to do here is copy, Command C, and then Command Shift V, which is paste special. And I think it's actually Command, let's try it again. Copy with Command V. I think it's Command Option Shift V. No? Control Shift V? No, I'm not getting it. Let's just go to Edit, Paste Special. It's the caret. Control Command V. When you paste special, you can paste the values instead of the formulas. And if you paste the values, what that'll do is hard code these. Very important to hard code after you've done a VLOOKUP like this if you're not going to keep track of the separate sheet. Now there are some situations where you want to keep the VLOOKUP, and we'll get to that actually in a future example. Now let's do another VLOOKUP here just to get the hang of it here. We'll do valuation date this time. So you remember what to do? Equals VLOOKUP, parenthesis, we're looking up the bank loan number, then we're going over to the other sheet, we're grabbing the series, this time we're going out to column C, and we'll go 3, because we're counting 3 over from the matching field, 1, 2, 3, and get valuation date. Once again, it's a 0 because we're only using a exact match. 0 is also the same as false, so we'll just type in false this time. And look, see what we missed? The bank loan number did not, for some reason, populate. So let's add that comma. There we go. Now, what's wrong with this? Well, it started as a accounting field, so this is actually a date. So if we shift it to short date, we'll see. Now, one little trick here, if you are accidentally seeing a number field and it looks like this, typically the dates are going to be 5 digits, and if it's a date that's recent, you'll see 44 in the beginning. So when you see a number like this, you can be pretty sure that it's actually a date. Same thing, we drag it all the way down, and now we've got all of the details as to when these valuations were made. So we want to hard code it again, Command copy, and then Control Command V for paste special, click values. Now it's hard coded. So now we don't have to worry about losing that data if something were to happen to this sheet. Now you'll see right off the bat here that this is kind of a cumbersome way of doing it, because if we had more than just 3 fields, we would be typing the same formula in again and again and again. One thing that you can do to mitigate that, I'm just going to clear all this out. You can use the same VLOOKUP formula, and you can do it all at once. So we'll grab it all, we'll start with 2, and then we'll take that same formula, and we'll pop it over here, and now this one's for 3, and then 4, and then this time we want to drag down all of the selections at once, valuation type. All right, so that it's back to the formula, so we want to make sure to hard code it all again. But what that did is give us an easy way. This might not work. Oh yeah, I'm going to do it this way, not with the headers. Values. Boom. Okay, so now these are all hard coded. We've got all of our data. Now, if you have more than 3, 4, 5 selections that you're bringing over, I have a little trick for you to do a VLOOKUP on a larger data set. So let's grab a new file. We're not going to look at property value anymore. Let's get rid of that. We're going to look at credit report data. So this example is used because it gives us way more fields to look at. The occupancy, the FICO, the senior lien servicing name, the senior lien account number. I mean, this goes on and on. So we wouldn't want to type in VLOOKUP, even if we're using the copying and pasting trick, we wouldn't want to type this in how many times? 16 times, well I guess 15, to get all of this data. So here's a little trick that I use when I'm merging in multiple fields like this. This is a trick that I'll use when I get CoreLogic data reports back, or when I'm looking at a Pro Title USA dashboard. And what that trick is, to add a column in your data file, the new supplemental data that you're bringing in, and add the order here. So I'm going to go like this, and same thing, double click, it'll actually finish the count. So this is from 1 to 23 in a specific order. Now I'm going to do the VLOOKUP in reverse now, and we're using asset ID instead of bank loan number this time. And what we're going to do is do a VLOOKUP here to get the order. So what this is going to do, and you probably already know what's about to happen, is bring over the exact order of those specific assets, and we're going to have a lot of mismatches here, a lot of assets that aren't on that list. But what we can do now is sort by ascending, and there we go. There's the 23 loans in order that we have over here. So we can just copy and paste all of this data into a whole bunch of new fields and get that credit data exactly where we want it. Now, major caveat here. If you do this and there are missing, and look, there's one right here, I spot checked it, but what I'll do is go equals this minus this, because these have to be in order with no missing gaps. Otherwise, the copy and paste would not work. So see that 2? One of these things is not like the other. This minus this was 2 instead of 1. It should have been 2, 3, 4, but it skips 1. So what that means is that this sheet is missing asset number 3. This loan is not on this sheet. And I didn't even realize this when I put this together, but it's a great learning experience. And that's exactly why I use this spot checking tool. Just equals the one before minus the one after to make sure that they all say 1. If they don't, and if it's a huge list, you could go like this and you could see, oh, there's the 2, and then you can actually identify where the issue is. But in this case, we just want to add a blank row here so that the copy and, well, you can do it 2 ways. You could add a blank row, copy and paste it in, and then fill in the missing detail here. Or, let's undo that. Or what we can do, since it's maybe more relevant, is delete row 3. Now these line up. And we could redo the order here like this. That sort of doesn't matter at this point. They all say 1, and now we can grab this list. So here's another little tip for you. When you're merging in this data into the sheet, grab the asset ID as well, because I'm going to show you a way that you can spot check this, just as a second redundancy to make sure you're looking at the right data. So we're going to grab all these fields, and we might have not added enough space here, but let's just paste them in anyway. Yeah, so there's a whole bunch of fields that we need to add to make sure we don't delete any of our precious data. So we're going to go insert columns, make sure we have at least 16 of them, and let's paste it in. Got to grab it again, copy, and paste. All right, now it works. We didn't delete anything, so we'll remove those extra fields. We'll highlight these fields just so we know what we're looking at, and we don't need these anymore. So I do need one of those. So what I'm going to do to confirm that these are equal is a pretty simple formula. This is not in our agenda today, but I think it's worthwhile to look at. Equals if this equals this, true or false. So we drag that down, and there we go. They're all true. All of these fields match these fields. And if there's any little issue, let's make the 8 a 3. Oh, there's a false. So if we had pasted this in originally, and then we ran this spot check, we would have noticed that that third asset was not accurate. So if-then statements are really cool. I mean, this is just an if statement, but you can also nest these. So if this equals this, then you could do, oops. I guess it's not a then statement in Excel, but basically you could add additional if-thens to continue that logic chain to determine other things. But we're not going to get into that in this episode. We're going to move on to the next example here. But this is a high-level way to paste a whole bunch of fields at once and make sure that they match without having to do the VLOOKUP 16 times. All right, so let's look at two more things. We're going to look at payment history to combine both the pivot table and the VLOOKUP. Well, let's do that first. All right, so this is really interesting because it's the export of all of the payments that have been received on the portfolio that is in question here. And what this is showing us is that, and you'll see here in the dates, that this is payments from 2019 and 2020 across all of these loans. So what we're going to do here is get these payment histories into a format that we can then paste back over into the master inventory file so that we can see the consistency of these monthly payments over time. So what we're going to do is start with a pivot table. And the pivot table is going to give us the list here without any duplicates. So I'll show you this conditional formatting tool real quick so to show what we're actually talking about. They're all duplicate values. Pretty much all of these are duplicates. I mean, here's a bunch. These are all different payments on the same loan. And what this means is that we couldn't do a VLOOKUP here because it's only going to match the first one. This one has a whole bunch of duplicates, 3 duplicates, but it would only match the first if we did a VLOOKUP. And then we're not capturing the other payments that have came through. But what we can do to turn this large sheet of duplicate loans of different records on each loan into a single row that we can then paste over into Excel or into our other master inventory Excel sheet is run a pivot table. So new sheet, just like before. Take the loan number in rows. Now there are no duplicates. It's every single asset in that portfolio. And then grab the payment date into the columns. Now we didn't use columns before, but what this does is summarizes, and we're going to have to tone it back a little bit. It summarized it a little bit too far here into the various payment dates. So what we're going to do is ungroup those. So now we see all the dates. So you can see here, there's a lot of different dates here, but we want to make these grouped just by month. Now here's another caveat, I guess you could say, of pivot tables. But if I go group and I group by months, this is an issue. Watch what happens. There's only 12 months in the year, but you know we had details from 2019 and 2020. So the problem with this sheet is that this January field is going to summarize two payments, the January 2019 payment and the January 2020 payment. So this is wrong. We don't want it summarized this way. If we were only looking at a payment history for 1 year, then that would work because there'd be only one payment in each month. But because this is 2 years worth of payment histories, this is incorrect. So let's go back to the full listing. Instead, the workaround here is to go group by days and then just put in 30 days or 31 days. But in any case, that's going to give us 24 columns. So, well, not 24. It would be 24 if there were 2 full years. But in this case, 18 months worth of payments. All right, so now we've got our x-axis and our y-axis here. Let's add in the total payment amount into values. All right, now this is starting to look like a payment history. Look at that. So this is specific loan, receiving a payment every single month. Here they missed a payment, kept paying, and then looks like they went into default again, a bunch of missing payments. So what we want to do now is bring this data over into our master inventory. So the way I'm going to do that, similar to that other VLOOKUP exercise, and sorry guys, let me zoom in a little bit. All right, so what we're going to do is grab all of this data. I use the Shift and Command to, remember, if you hold Shift, it selects everything, and Command jumps to the end. So I did that to select everything. We're going to copy all of this, and we're going to paste it outside of the pivot table. So the problem is when you're in the pivot table and I want to like insert a row here, a column, I can't because it's stuck in the pivot table. So what we want to do is copy all of this and paste it so that we can manipulate it without the pivot table caveats here. So we're going to copy it all and we're going to go down here. Now if I just did Command V and pasted this, it would paste with the pivot table formatting. But we want to remove the formatting, so Control Command V on Mac at least. You'll have to look up the hotkey for that, paste special if you're using a PC, but we want to do it by values. And now what we've got is a sheet that we can manipulate. So we can use this row to do the same thing we did before, order, and start with 1. Once you have 1 and 2, you can drag it down and get all the numbers. All right. Now remember, if we had done this with VLOOKUP, it wouldn't give us all of these fields. We'd have to individually post 18 separate VLOOKUP formulas. You could copy and paste them, but it would take a little bit more time than you want. But in this case, since we added the order field, we go back over to our master inventory. We don't need these two anymore. We did spot check them. This time though, we want to add the order of the payment history. So let's do a VLOOKUP in reverse here. It's the same formula, I'm just saying in reverse because we're looking up content outside of our master inventory. We're looking up the asset ID, and then we're going, now here's another trick here. We've been highlighting entire columns before, but if in this case we don't really want to match any of these fields, we only want to work with this one. You could get around this by adding a new sheet or deleting the pivot table, or there's some different ways you could do it, but in this case, we're going to grab all of this detail. And then there's a way you can do it with hotkeys. Oh no, we already did it. See these dollar signs? This means that as the pivot table searches this array of content, it's not going to shift. And you'll see that in a moment. And we'll go 2 because we're just getting the order here. 2 and 0. All right, row number 72. So now what these dollar signs do is that as I drag this down, you'll see that these numbers do not change. If the dollar signs were missing, it would go from 103 and 199 to 104 and 200 to 105 and 201. But in this case, since there's dollar signs, it freezes that array. So we want to go all the way down. Let's go all the way down and now sort this order ascending. So it's the exact same order as this payment history sheet. Back over here, we're going to do our spot checking tool. We'll go equals this minus this. Let's make sure we don't have any 2s. Oh, we do have a 2. All right, row 47 has issues. Let's scroll down to 47. All right, so 46 is missing. Row 46 is not on this sheet. You could also see 0 if there was a duplicate asset, and that's also something that can throw you off in this exercise. But in this case, we're missing row 46. That's the only 2 when we did that filter. So we'll go back over here, and in this case, we'll delete row 46. We don't need that. Deleted. All right. So now what we want to do is take all of this data, 18 rows plus 2 more, just so we get the loan number to spot check as well, and add them in. And what actually we're going to do, instead of adding them in the beginning, we're going to add this right on the end of our master inventory. So let's grab it all. Hold Command and Shift to jump all the way down and highlight it all. Hold Command and Shift and click the right arrow to jump all the way over to the end. Copy that. Go back over to here and paste that. All right. So let's do a secondary spot check. We did the order spot check, but this time we're going to do the if statement. If this equals this. And I think that you don't even need to do the false. If you just go like that, it'll work. All right. It'll say false if it's bad. And major learning lesson here to teach you guys something else. Do you see how this row has a filter button and this row does not have a filter button? This is very scary if you end up in a sheet like this, because this filterable section does not influence anything outside of the filter. Watch this. Well, it does change, but the problem is when you don't have these filters on, your content over here will not change orders if you change these orders. You see that? We just broke our whole thing. Let me undo twice here. Undo, undo. So they do filter out, but if you change the order, anything that's not in the same filter row with these carets on it is not going to change order with it. So let's say you pasted this in and you're like, oh great, I've got all my payment history records, all my master inventory now. And then you get back to work, you're like, I want to filter by unpaid principal balance so I can see my most valuable accounts up top. And you filter that and you scroll back over. This no longer matches. Look, they're all false now. Now we've got all this bad data that doesn't match the loan number. Undo, and it's because they're not in the filter row. So what you want to do to correct that is highlight the first row and sort and filter. Just clear that, turn it back on again. It's pretty simple. And what that'll do is make sure that the filter rows go all the way to the end. And now if we do any changes over here, everything will reflect that change. You see that? So undo. All right, so now what we've got, and what I would do to clean this up, because we did that 30, this is kind of sucky actually. To be totally honest, I would probably do this payment history exercise 1 year at a time, because right now if I did January 2019, it's not actually January 2019, it's January 27th to February 25th. So this was really just a point to show you how to use payment histories from a separate vendor and put them into a format that then can be pasted into your actual sheet. But in reality, the way I'd want to do this is to only be looking at payment histories for the current year. And then when I do this payment date, I would ungroup and I would group by month. As long as you're grouping by month along 1 year, then this would look clean and be effective. Like I said, the caveat here is that it was multiple years of payment history. And for some reason, and correct me if you can figure this out, for some reason it does not break January 2019 and January 2020, separate them, unless you do that group by days, and we can do 31 days. But either way, the date ranges are not specific to each month. But I'm getting in the weeds here. Let's do one more example. This one I've been saving for last because this is probably the most exciting example, I would say, and that is to use VLOOKUP for modeling purposes. So I've got a database here. This is my state foreclosure and tax laws. Look at that. A bunch of content about specific states and also some specific state details about tax deeds, tax certificates. So this is great content, but it's pretty tedious to go over here, see what state we're in, and then go over here and look at it. So you see where we're going with this, right? What we want to do is bring in this data over to this sheet based on the collateral property address. So let's find the state here, somewhere over here. Here it is, property state. And we want to know, let's see first, we want to know judicial or non-judicial. Judicial or non-judicial. And this is going to tell us whether or not equals VLOOKUP, grab the specific state abbreviation, jump over to our little database, grab column B, because that's where the abbreviation lives, and over to judicial, non-judicial. It's the second, so even though it's column C, it's the second column from the lookup. So we go 2 and 0. All right, so this one's both judicial and non-judicial. These states are all judicial. Do we have any non-judicial? Oh, look at that. We've got 0 non-judicial states in the mix. Now, the states that say both, you can pursue both non-judicially until the borrower, if they were to dispute it, then you'd get into a judicial process. But this gives you a very quick glance specific to each state if it's judicial or non-judicial. Let's see what else we've got over here. Foreclosure timeline. Oh, here's a good one. Statute of limitations. So this is promissory notes. So we want to check the statute of limitations is the limit of collectability after the, and these are in years. So 6 years after the borrower's last payment date, they could remove the statute of limitations, could remove the personal liability of the promissory note. Now, just a caveat here, also getting into the weeds, but if you were to lose your enforceability of the promissory note because of the statute of limitations, you still have a lien on the property. So you could still enforce a debt in Alabama by foreclosing on the home, but your promissory note would no longer carry personal liability. So let's just see in another column here, and remember what we do. For some reason my thing's getting shifted. We want to hard code that. So command copy, command control V, values, paste. So now these are hard coded in. Let's add one more for SOL. So in years. So now we're going to go equals VLOOKUP. We're going to look at the state. We're going to jump over to the database, go state to the statute. Oops, messed that up. Go from the state to the statute of limitations. And this is a merged cell, so it actually skipped right over column I and jumped right to column J, this statute of limitations cell. So now we need to count 1, 2, 3, 4, 5, 6, 7, 8 rows over. That's where we're returning the lookup range. All right, there's the statute of limitations. Now here's a little kind of a funny side effect of VLOOKUP. If you're hunting for data that's like 8 rows away like this, you can count it. But what you can do to make it a little bit easier, if you have data in each of these fields, you can just go like this and look at the bottom here. Count is 8. So we know it's 8 rows away from where we're looking it up. But sometimes I'll do a VLOOKUP that's 100 rows deep. And sometimes there's blanks in between. Like if this was blank, this only says 7 now. So that would be incorrect. We'd be referencing the reference link instead of referencing the correct statute of limitations link. So sometimes what I'll do when I'm typing in a VLOOKUP formula is kind of guesstimate where we're at. I'm like, oh, well, maybe it's in row 9. And well, in this case, it actually does return the statute of limitations for written contracts. But let's say I did 10. What you're going to see is this ref error code. What this means is that the range that you've defined, you're specifying a field lookup that's outside of the range. So sometimes I'll guesstimate that it's 10, and then I'll back it down. And as soon as I get the hit, in this case, it's the hit is actually in row 8, but that'll give me a quick way to do a VLOOKUP across a large amount of columns in a kind of quicker guesstimation fashion. But that's besides the point here, because what we're talking about is the statute of limitations in years. We want to hard code that again so we don't lose that data if we lose the other sheet. But what we can do now, and this is absolutely outside of the scope of this specific call, so we're going to maybe revisit this in the future, but what you can do is create a statute of limitations flag and basically take the last payment date, like we talked about, the last payment date triggers that statute of limitations, or the maturity date if it's in certain states, and add to that the amount of years. So we'll go 365 times this. Yes, all right, and then make that a date. So now what this is saying is so this is 2019. In 2024, 5 years after this, is when the statute of limitations will be triggered. Now we can add one more thing here. If this is, if it's less than today, then SOL flag, and if not, good. All right, look at that. So now we get some statute of limitation flags. So we can see that these are good because they've been, the statute date is beyond today's date. And these ones have flags because the statute of limitations date, 5 years after 2008, has already happened. So this part you do need to talk to an attorney about, because whether or not the statute is triggered by the last payment date or the next due date or the maturity date is going to be specific to that statute in that specific area. But here's a nice little formula, yours truly, provided for free. So you guys can use this if you want as a statute of limitations. Just a quick way to give you a flag. And what I'd also do here is probably do a conditional formatting, highlight cells, new rule, and classic, and I'd go only cells that contain SOL flag. And what this is going to do is make sure that anything that's a flag is red. So now we can see it at a glance. That's a great little formula that you could use again and again if you've got this sheet. And that brings me to an exciting part of today's episode, because I want to sell you guys on the FIXnotes Mastermind. So we've created this Mortgage Notes Mastermind as a place for people to ask me more questions, to review additional details about our case studies, and to get all of that information about the various states and counties. So this is pretty cool, because what we've done here is created this database and shared it with all of you, the mastermind members, as to all of those specific fields. And there's a lot more in here that's not actually in our spreadsheet as well. The amount of cost it would be to foreclose on average, the Fannie Mae allowable foreclosure fees, what you'd expect to dispose of an REO, average months to foreclosure sale, average months to REO sale, whether it's a homeowners association super lien state, whole bunch of content here, very, very useful stuff. And then each state has a separate county. There's 3,112 counties listed here, and we can see which ones have subscriptions necessary in order to access deeds, which ones have deeds or taxes online. We can see a link right away to take us to the specific county's page, their office address, their tax collector's phone number, every zip code that's in that specific county. So you could just search over here for a zip code of one of your loans, and you can see what county it lives in. So this is a great database which we're offering to the mastermind group. It's $30 a month to join the mastermind. That price is 100% going to go up. I think probably we'll increase it either after 10 members or 20 members have joined at the $30 rate. We have 4 members so far. 4 paying members have joined the mastermind group. And let me show you some other things in here. So we've got the event calendar. This has like today's episode, the paper source, the conferences that I've been speaking at, Note Expo is coming up. We've got a forum where we can introduce our different members. I put an introduction about myself the other day, so you guys can get to know me a little bit better. We also have discussion topics in here, like here's one: choice of Podio over other CRM platforms. Why do we choose Podio versus all these other options? So you can ask questions here. Ask as many questions as you like when you're a member, and I'd be happy to answer them. All of the case studies from the events, from the weekly episodes are listed here. And what's really cool about this, not only do you have a timestamp link right to the previous episode, but also we've got a quick summary of what we're looking at, and then this, which is cool, links us right over to the inventory record. So this is a whole bunch more information about that specific account and what exactly happened over in the inventory app. So what's really cool about this inventory app is, in addition to providing the additional content about case studies, it also offers you a template. So if you're using Podio, and that's why we're using Podio, to get people accustomed to it, to help you learn how to use it, but you could use my same format in order to track your own portfolio. So interesting to use this for that purpose. And then finally, document templates. You guys have been asking me for this, and this is going to continue to grow. But these are different agreements and cheat sheets and different things that you can use as a note investor in your business. How to prepare a satisfaction and lien release, or a RESPA letter, for example. Or we've just put out a COVID options letter to our portfolio that we're managing. So this kind of thing, you can get all these details and more information to improve your note investing career. This is going to continue to grow. I've got some big plans about how we're going to make this better. In my personal Podio database, I've got a bankruptcy monitoring tool, so I think I might want to unroll that to the mastermind group at some point. Obviously, the price is going to increase as these new features are added. So please, if you guys have any interest at all in the tools and the database that I put together, check it out over at FIXnotes.com/MNM for Mortgage Notes Mastermind. You'll see a link at the end of the show. Let's get back to the episode here. We got a couple case studies to talk about. Here we go. Where's my show? Here it is. And good, the music didn't blast in your ears again like it did last time. All right, so let's talk about assets for sale briefly, then we'll get to case studies, and then you'll have a link to that FIXnotes.com/Mortgage Notes Mastermind group, FIXnotes.com/MNM, so you can learn all about that. I totally actually didn't mention one of the most exciting parts about it. I offer 50% consulting rates to members of the mastermind group. So it actually pays for itself after 2 hours of consulting time. That pays for a full year of membership at $30 a month. So definitely check that out. All right, so in order to sign up to receive our database of mortgage notes for sale and future opportunities, you need to go to the website. You need to click on Buy Notes at the top. Once you get to that page, you'll scroll down and click Sign NDA for access. Once you click that, there'll be a short form to complete. That form will trigger a right signature document emailed to you. That right signature document is our non-disclosure agreement. Once you sign it, it'll give you the signed copy back, and it will change your membership to allow access to all of our inventory for sale. Once you go back over and you click My Account, you will see you are now Course Plus Inventory Access as your membership level. And if you click Buy Notes, you'll get a whole nother page with the completely unmasked confidential information for the inventory. So that's it, pretty simple. That's how you get started on FIXnotes.com/buy. I will give you one major caveat before we get into the case studies, and that is the portfolio that's available today for sale. It's not available to be cherry picked. We are offering the entire portfolio as a bulk acquisition. The price is around $300,000, and it's 1.5 million of unpaid principal balance. So if you have 300 plus some reserves to spend, and you'd like to look at a portfolio of second position and first position liens, mostly seconds, then definitely sign the NDA and get on the list for that. All right, so this is a cool case study because we're talking about an exit that has not been achieved in future weeks. And that is an interim servicing payoff. Well, what does that even mean? It was a $1,500 payoff, so it was a small one. But what that means is that this loan was purchased from a seller, but the payoff came in to the seller during the interim servicing period between when we closed the deal and when the servicing was transferred to our company. So it's pretty cool that when we work with trusted counterparties, that we're able to achieve a payoff before we even transfer the servicing to our own platform. So what happened in this case? Let me go through the details. $82,000 fair market value, $43,000 senior lien balance, so that leaves $38,000 of equity. It was a no-brainer that this loan was going to be paid off. It was just a matter of when. So we normally ask our borrowers 3 questions when we start that resolution process. What happened? Where are you now? And what do you want to do? Those questions help frame the next steps that we take in order to come to a mutually satisfactory resolution. At the end of the day, this business is about helping borrowers. And if you go through that uphill battle of fighting a borrower on a foreclosure when the borrower wants to pay and they want the home and you're not able to come to an agreeable resolution, it's not a good look. Frankly, it's not going to be the best use of your resources and makes the world a worse place. And we're trying to make the world a better place by helping borrowers out that are in tough situations. If they need to move from the home, if they can't afford it, you can help them exit the property gracefully. Or if they want to pay, help come up with a solution that fits their financials and earns you the yield that you're looking for. But in this case, we never talked to the borrower. This was a fresh acquisition with no contact status. And it was past the cutoff dates specified in our loan purchase sale agreement. So the servicing transfer was imminent, but there was actually a full payoff with the previous servicer already in motion. So the borrower intends on protecting all that equity in the property by paying off this small balance second lien with their existing servicing company. So before the servicing transfer was even put to paper, this borrower was ready to go to pay off the loan with the previous servicer. So what do they want to do? I mean, pretty simply, they want to pay it off, and the proceeds would be forwarded from the old loan servicer to our loan servicer, or to us directly, so we don't even have to get the loan boarded with a servicer. So this loan as a non-performer costs $600. That's 38.7% of the unpaid principal balance. That's probably a little less than you would pay for a loan like this if you were cherry picking it or buying it in a small portfolio. This was acquired as part of a very large portfolio, so it's definitely a more attractive pricing there. It was less than 1 month and less than $100 of expenses. All we paid for was the due diligence process, essentially. Onboarding, nope. Collections, nope. It was paid off before it was even service transferred for $1,548. So what are a couple of takeaways here? First of all, confirm your contract cutoff date. It should be the same as your date of funding or very close to the date that you fund the deal. That cutoff date is what puts you in the driver's seat as the new lender. So events after the cutoff date are the responsibility of the new owner, of you as a note buyer, whereas anything that happens prior to the cutoff date is the responsibility of the previous lender, the old owner of the loan. And this works for both good and bad situations. If we bought a loan today and the cutoff date was today, and then tomorrow that loan went to a foreclosure sale and was wiped out, it's now unsecured, well, that's on us because it happened after the cutoff date. But on the flip side, if that foreclosure had happened prior to the cutoff date, let's say we did all of our due diligence, it looks good, it's not, there isn't an imminent sale date, but we missed something for whatever reason, and right before we fund the deal, it's wiped out by foreclosure. That was misrepresented as part of the purchase contract as a secured loan and would be a repurchasable asset from the seller to the buyer. So the seller could actually buy that loan back to basically honor their representations and warranties on the contract. So the point is the cutoff date is the date that the ownership transfers, and good and bad, either way, whatever happens after that cutoff date is on you as the new owner of the debt. So because of that, you need to work with trustworthy counterparties who honor the contracts. And I can definitely see there's some issues in this space when loans are transacted and then positive developments happen with the previous owner, and then the deal falls apart. That's no good, and that's actually a pretty bad faith way of doing business. If you get a contract in place and get the deal funded, those opportunities, whether good or bad, are now on to the buyer, if you're in the seller's perspective. So I know back in 2018, I closed a whole lot of deals that were a delayed servicing transfer. There was an interim servicing transfer period, and at the end of that interim servicing transfer period, anything that was acquired, any proceeds that were received by the current owner, by my client, were then passed along to the buyer as the owner of the debt. So we actually wired over $100,000 to multiple investors at the end of the interim servicing transfer because loans had paid off in that that in between transferring from our servicing company to the new servicing company, but after the cutoff date, which effectively provided ownership to the buyer. So it's definitely an important thing to have good counterparties that you can trust to pay those proceeds to you as the contract determines. And then finally, if possible, review the servicing details to identify any potential payoffs. This is not always possible. A lot of times the loans you may be purchasing have no activity, no servicing statuses. But if you're able to, you can use other sources as well, perhaps looking at the MLS to see if the property is pending a sale. That could give you a little bit of insight as to what's going on and what's going to happen next when you actually do acquire the loan. All right, so let's move on from the interim servicing payoff and talk about a loan sale. So this was a $9,344 purchase from an investor just in this past month. It was a non-performing second lien secured by a single-family residential property. The fair market value is $509,800 with a senior lien ahead of it of $600,000, which leaves negative $90,200 of equity, securing our $77,873 unpaid principal balance. So it's underwater. There's no equity available to the junior lien holder. But you can see when we get into this that there is some potential here. So bulk or retail sale, due diligence findings, and final purchase decision. This is how we're going to frame a loan sale as opposed to the what happened, where are you now, where do you want to go, where we frame the borrower resolutions. So this was a bulk portfolio. It was a blended portfolio. It was mostly non-performing second liens. There was one non-performing first lien in the blend. Due diligence findings. So that $600,000 senior lien balance was ascertained from the credit report. It was the senior lien trade line origination amount. So because the senior lien did not have any active reporting on credit, we used that $600,000 figure as the best data point that we had. Something to determine, something to plug in for our calculations on equity. But because it was not actually the accurate amount, it could have actually had some equity. So we had this loan listed as a senior foreclosure pending, but there was no recent senior foreclosure documents filed in the county records. It appeared to be a negative equity loan based on that origination balance, but it may have a lot more equity than expected if the senior lien has been paid down. So at the end of the day, the final purchase decision on this one was to include it as part of the package at 12% of the unpaid principal balance, which is a pretty fair price for a loan that has a fair bit of uncertainty. So some takeaways here, some other considerations. This was a follow-up trade with a buyer we've done a lot of business with this year. No nonsense, fast due diligence, easy closing. So that added some, definitely some goodwill to the deal, that we'd done some business with them in the past already, and they're quick. The due diligence process from indicative offer to funding was just about 2 weeks. There's no escrow third party necessary because we have that track record with the buyer, and the servicing transfer was initiated the day after funding. So we got this one just slated from our servicer to go to the new servicer right away. And typically it's a couple of days before they can get their RESPA letters generated, and then it's 15 days until the servicing transfer actually takes place. So we initiated it right away, but typically you're going to see almost 30 days to get to that servicing transfer. And then finally, the collateral shipment to be determined. I think because they're a local investor, we might actually have them come to the office and pick up those files. Not my office, to U.S. Mortgage Resolution's office, who's my client and was the seller of this deal, for $9,344, 12% of the UPB. So that's it for the case studies. That's it for the show, guys. Of course, we've got our giveaways slide here. We give away, I think this will work. Yes, 15-minute consultations to anyone. In the past, we've been talking about subscribing, liking, and commenting on the videos. I still really appreciate it if you guys do that. In fact, congratulations, everybody. We reached 100 subscribers in this past week. So now we have a custom domain. You can find us on youtube.com/FIXnotes, which I'm very excited about. But what's cool about this is I can offer these subscriptions or these consultations to anyone. If you go to robbymax.com, sorry, I always say this, robbymax.youcanbookme.me. I said it wrong again. You can just read it. That link will give you a calendar of my schedule, so you can book a 15-minute call with me. First 15 minutes is absolutely free. Be happy to talk to you, get you pointed in the right direction, or strategize with specific assets that you're working on. But please subscribe, like, and comment anyway if you want to support the channel. It really means a lot, and I appreciate that. All right, that's it for the show. Thank you so much for watching, everybody. We went to another hour-and-a-half long show this week. I've been trying to slim down the show, but there's just so much to share with you guys. I hope you were able to stick with it and learn a bunch. And of course, that link I mentioned, let me move myself off of here. We got all the free stuff, and then the next level is the Mortgage Notes Mastermind. You can get that at FIXnotes.com/VIP. Also, FIXnotes.com/MNM for Mortgage Notes Mastermind. I hope that has some value to you and you meet the deadline to get in for 30 bucks a month, because that's definitely going to go up in the future. All right, let's go feed the fish. Let's go check the camera. Oh man, the camera's dead. We got that camera. We've got 2 dead cameras, folks. Unfortunately, that means that there's going to be no koi feeding today. I'm very sorry about that. For some reason, the backup battery pack died. I think it's because we streamed today for an hour and 27 minutes, and that's a little bit beyond the capacity of the camera. So thank you again. Thank you so much for watching. Thank you for your support. And please tune in next week. If you want to leave me a comment as to what you want me to cover next week, what topics you guys have in mind, I would be very happy for that. I have no topics in mind right now. I'll probably think of something by the end of the day to at least put in a placeholder for next week. But I'd be happy to fine tune it and customize it to benefit you as best that I can. Thank you again for joining us. We'll see you next week, guys, and have a great day.